Good morning, everybody. Welcome to March. Really quickly here, I'm going to try and put a video together before the Bank of Canada announcement. We'll go over some of the some of the February data, and then I'll jump into a couple of news items and kind of my thoughts on where we're going to see things head. So let's get into it. Of course, the thing most people want to know about is price. So we did see the average price tick up ever so slightly, month over month. There, we went up about 1%. It is flat across year over year, as well as pretty much 2021. We're pretty close to being flat on pricing there. So keep that in mind. I think this is going to be kind of the norm for a while. Taking a look at new listings. So new listings, we did see about a 29% increase, or sorry, a 13% increase on the new listings month over month. So it did tick up just over the 1,000 mark there for February. Sales also went up. Not sure if anybody recalls last month, I did say that I expect somewhere between 600 and 700 sales. We did fall slightly short of that target there. Came in at 580, so ever so close to that 600 mark. I think we're going to see it continue to increase in March and April, though. We'll see what happens. The really interesting data point this time around is days on market. So days on market did drop off quite significantly. We're sitting at 46 days on market as your average time to sell a home. That did drop down to 37, so it's a pretty substantial drop. But it is kind of a seasonal trend we see. If you look at some of these other peaks and drops, it's usually January, February, sometimes December that you see those peaks. January falls off, January falls off, January falls off. So it's not exactly unheard of for this kind of trend to happen. So we'll see. We'll see how sales compete with new listings moving forward. I still expect prices to kind of remain flat. Really, I don't see a huge change in rates anytime soon. Of course, like we said, that announcement's coming up here in about an hour. I expect the Bank of Canada is going to hold. I expect they're going to hold on the next announcement, and I think we'll be lucky if we see a cut in the summer months there. A couple of reasons for that. We'll jump into some of the news that's impacting or hitting the market in the real estate world. So Tarion. So Tarion is the company that provides warranties for new home constructions. They also provide some consumer protection in situations like this one, where they are now seeing the most historic claim they've ever had, with developers walking away from projects and would-be buyers losing deposits. So another kind of crack in the ice, showing you the economic strain that's going on that a lot of times people don't want to talk about. So something else that's going on, CMHC, they were one of the mortgage insurance companies. They had a first-time homebuyer incentive. For those who don't know, the way this program worked is essentially you were trading a 5% equity stake in your home for CMHC to contribute additional down payment, which would then, of course, reduce your monthly mortgage payment. So I understand why they came out with this incentive. A lot of people want more programs for first-time home buyers. So, of course, there's going to be successes and there's going to be failures. From what I understand, this had a very low uptake. Of course, trading away your home future equity isn't always something that people look favorably on. However, I also, from what I understand, it was quite a difficult program to qualify for. So even those who did actually look to utilize this program, a lot of the times they wouldn't qualify based on the guidelines. So I personally think that this is also a sign that the market is going to remain flat for the coming years. Of course, we'll see prices go up and we'll see prices go down, but I think it's going to be more common year over year that you see some of these trends where the market is flat. And if CMHC is going to get their money back, the houses have to appreciate in order for people to sell and pay CMHC back that 5% equity share that they're owed. So, to me, this could be a sign that they know that it's going to be a riskier, not as likely chance that they're going to see those returns on the initial investment there. A couple other things. The U.S. economy is doing very well. It's great for the U.S. We've talked about this before, but if the US continues to do well, it's going to make it hard for the Bank of Canada to cut, especially in situations where the US may have to raise their rates, which is something that's on the table. If anybody follows Bitcoin or crypto, Bitcoin's just been on a tear this past week. A lot of the other stock markets are doing very well. And these kind of things play a factor in terms of what the Fed's going to do. We'll see what happens. A friendly reminder, even if the Bank of Canada does reduce rates today, which again, I do not expect, that only impacts variable rate mortgages. It doesn't directly impact fixed rate mortgages. The fixed rates are going to be more tied to the 5-year bond, as we've talked about before. And now we are seeing some downward movement on the bond yield. We're sitting at just under 3.4 there. But again, this is still quite high in terms of the 10-year average here. We're still sitting at that 2008 kind of threshold. So I don't really see rates changing substantially to a point where it's going to give people more buying power. And until that affordability calculation is more balanced, we're going to continue to see trends with price moving down. A couple other things I've seen this past week. I've seen something coming out of the Durham region where a realtor or a group of realtors are approaching or kind of headhunting consumers, for lack of better description, to essentially stand in and place non-competitive offers, let's say. So they're offering to pay people, $200 to $500 for X amount of offers, or they're just simply putting a number on a piece of paper that would never be accepted, just so that they can then turn around and tell everybody they have 5, 10, 20 offers, whatever it is that they end up producing through that method, on top of the actual legitimate offers. So for those of you who aren't aware, this is an obvious RICO violation. It's also, from what I understand, a federal violation. So don't do it. And if you see people doing that kind of stuff, report it. As far as I'm concerned, RICO is far too lenient on agents who intentionally go out of their way to do things like this that should be very obvious no-nos. So if I had a say in it, I would say do not pass go, do not collect $200, turn in your license, game over, go get a new career, because likely what'll happen if they even do get reported or caught, maybe they get a $500 to $5,000 fine, and realistically, that's not really a deterrent for a realtor who's making money. So it's unfortunate, but be aware of that when you're out there, competing. Not all offers are going to be over asking offers. So just try not to get wrapped up in that FOMO as best as you can. Like I said, I do expect prices will go up slightly in the spring here, but I think they're going to come down just as quickly in the back half of the year as well. So keep that in mind. Let's see some trends to March, or predictions, I should say. I think we're going to get probably over the 700 mark for transactions in March. March is usually one of the busiest months. We could even break into the 800 depending on how weather goes. I think you'll see new listings continue to outpace sales though. So we could see somewhere in the 1250 range for new listings, maybe 1400 if it gets really, really busy. But I still expect to come in with more new listings at the end of the month than sales. So we'll see how that goes. And stay tuned for that Bank of Canada announcement. Like I said, I don't expect them to to lower not only this meeting, but the next meeting. And maybe we'll see some sort of cut in the summer there. But time will tell. All right, guys. See you later.